Okay.
Here's my green screen. And we are live. Welcome to Rebel Roundtable on this lovely Friday morning. And today, I'm very excited to have Louise Cochrane with me. Louise is a fantastic tax person to know. She has her own firm called L. Cochrane and Associates, and she works primarily with high performing badass women business owners. Um, she has a great background in audit, tax, very analytical, looks at the numbers differently, asks questions. So if you think taxes are just about the tax return, you are missing out. Outside of work, Louise travels a lot. Always a good conversation with her to have about her travels. And she and her husband have three lovely children. So Louise, thank you for being here, especially during tax season. I was very impressed that I was able to get you here.
I was just honored to be invited. I'm really excited to be here.
So I always joke that lawyers are really good at strategy when it comes to like their practice area. You throw a bankruptcy question at me and I'm all like nerdy and getting into it. But I feel like, and please correct me if I'm wrong, that we miss a lot of strategy that could be involved in all kinds of tax decisions. Is that your
Yeah,
experience as well? Yeah.
yeah, absolutely. I mean, it comes down to like organization, good habits, and sometimes people just think that they can be in the back seat running their practice and their bookkeeper is handling everything. And that's so not the truth.
Wait, that's not how it works. The bookkeeper's not doing everything. So starting at basics there, what should a you know law firm owner be looking at from the bookkeeper when it
Oh,
comes to tax?
yeah,
Yeah.
from the bookkeeper. Well, first of all, you need to quiz your bookkeeper and know if they know what IOLTA is, right? That's just a no-brainer. And even
Yeah.
if you're an attorney and you're in a line of business where you don't necessarily have to maintain an IOLTA account, still pretty important to ask your bookkeeper if they understand what IOLTA is, because that's like a immediate test to see if they're able to understand the importance and the
Mm-hmm.
legal requirements that you need to maintain for your licensing to make sure everything's legit. But then on top of that, you want to have a bookkeeper that's smart enough to understand what a tax preparer is going to want to have on the information that they're providing. And I think sometimes these days, either bookkeepers are more of an older generation and aren't keeping up with the digital age, like they're scared of QuickBooks Online, um, or they're like all about desktop, or they're too young and inexperienced and they just don't know how important each category is and how refined it can be. Because it's not just for the tax return, actually, it's also for just data points. And we all know
Right.
chat can analyze that for us and help us figure out, okay, if I were to tweak two things in my business to get to this revenue this month, what do I need to do? You can't do that without data points.
And you can't do that without looking at your numbers every month and knowing where you're going. You can't just look at the end of the year and say, okay, here, tax preparer, here's my shoebox of receipts. Do
Yeah.
your magic.
Yeah, absolutely. And I guess one tip, if a solo attorney or even a small practice has the bandwidth with their bookkeeper, consider doing your personal bookkeeping, because it's great to know what's going on in your business, but if you just take your draw or take your wage and then you just spend it all on DoorDash, you're going to pull more from the business. But what if you were actually keeping on your eye on your personal finances just as much as you are doing the business? You can have two really great things to work with.
That's a really good tip because I do find that even professionals, because of the bankruptcy attorney, I would see a lot of crazy spending sometimes. We don't necessarily pay attention to our personal like we would a business. We don't pay attention to the business either sometimes. But that's a really good point. I had never really thought about having a personal bookkeeper do that and keep me on track. You
Yeah,
also said something really interesting that I would just like to, we didn't talk about this at all because none of this is scripted. I don't do scripting and it's no fun. Um, but talk about the generational differences too a little bit because there is, I think the law and accounting has some of the similar issues with the old school way of doing things and not wanting to go to QuickBooks Online like that some magical new technology when it's been around for like 20 years.
Mhm.
Um, and then lawyers also have the same old school. And then the new guard that's coming in, they're just middle ones. The new guard coming in isn't learning the old, but no one's teaching them the new.
Yeah, yeah,
It's really weird.
yeah, yeah. No, we're seeing that a lot. So like, geez, when I started my practice 13 years ago, there was this statistic in the AICPA, so the National CPA for
Yep.
organization, and they said that within the next 15 years, so here we are, 75% of their member base were going to be over age 65 and ready to retire. I've met 84-year-old CPAs that are still practicing with no exit plan. I've seen the whole gamut, but a lot of people are coming through my inbox as referrals, and it's because their accountant has died, or because their accountant was sick, or because their accountant just wanted a buck, sold their practice, their fees got tripled, and now they're stuck with someone they don't know. And so then
Yep.
that's just one part. And the same thing's going on in the bookkeeping world. You can't sell a bookkeeping practice that's operating on the old system. No one's going to want to
Mhm.
buy it because it's not efficient. Then on
Right.
the other side, getting people to come in and work for you, same as lawyers, same as financial advisors, all the professional service industry. Just there aren't enough people enrolled in colleges and for accounting. Like everybody's worried about this AI and that it's going to take over. But the
Mhm.
truth is that people who know how to use AI are going to be the ones running these tax practices.
Yep.
Um, and I guess the tip there is if you're ever talking to a bookkeeper or a tax accountant, you want to ask them if any of the work is offshore or outsourced. You want
And
to
why
know
is that? What should they be
well,
looking for?
yeah, because you want to know if your financial information, your personal information is leaving the country. Once it leaves the country, there's no jurisdiction. If anything goes wrong, and they say, oh, we have security, we have a fail safe, they have to VPN in, and then if something happens, we can cut it instantly. Doesn't matter. That information's left, it's gone, it's in the ether. So you just want to be really careful and just understand. So sometimes some firms and bookkeepers come off with higher prices, but it's because they're keeping people in America employed versus sending
Mm.
it to the Philippines or India, or another popular one is Brazil because it's the same time zone.
Ah,
So it's really interesting to see.
yes, as an identity theft attorney, I've done a lot of identity theft issues, and with the IRS, if your IRS account gets somehow hacked, you get a return filed by someone else. It's such a headache trying to fix that and the pins and all of that. So definitely don't want identity being stolen and personal
No,
information out there.
yeah,
Mhm.
no, that's a whole nother conversation. I'd love to tell you
Right?
some horror story.
We'll go off on all kinds of tangents. Um,
Halloween segment.
how about let's talk about deductions and expense optimizing? Because I feel like at the end of the year, attorneys like run around trying to buy things because our accountant told them to get more deductions. I'm like, this should have been a conversation, it seems like earlier, but
Yeah,
maybe I'm wrong.
yeah, that's a big difference between tax preparation and tax strategy. Tax strategy is year round. Tax preparation is just a snapshot of how last year went. When you're doing something year round, you have more control. You can change habits. You can use last year's tax return as a blueprint to change how you're spending. Another thing I love to do with my clients is I say, hey, put together your wish list. If you had all the money you need in your personal bank account, your business is thriving, you're making payroll, and you have an extra $50,000 of capital to spend, how do you want to spend it? Is there a software that would make you more efficient or have more return on investment? Is there an employee? Is there a program? Is there a retreat? Something. And you have this list of 5 things. So as you start making your way towards that, or manifesting, manifesting, whatever you want to call it,
Hmm.
you start making your money work for you in powerful ways rather than just last ditch effort. I'm going to go buy a car, even though I bought one last year and the year before that because it has the best deduction. What are you going to do with 3 cars and only a 1 car garage that's full of stuff? Like you just don't get as much to reward and return if you're just doing a manic kind of spending. So it's
I
all about planning.
Yeah, I do see it a lot. Like I'll see posts in Facebook groups and things like that at the end of the year. I'm looking for, online courses. I'm looking for all kinds of things. And I'm like, but you should have known that you needed these deductions and should have planned. And I know it's easier, like following your own advice sometimes is probably easier said than done, but
Yeah,
I totally
yeah.
see that.
But
And
if
what kind of
you're,
deductions
yeah,
are out there? What do you see? I want to know what are the most overlooked tax deductions that
I
lawyers are missing?
I would say it always starts with the entity formation, and I'm not going to get into that too much because I know that's one of the fundamentals that you learn at law school. But you can be a sole proprietor, you can be an LLC. If you're by yourself, you're a sole proprietor. It's just a different filing for the LLC part, single member LLC, right? Then you have
Mhm.
the S corporation and the C corporation and the partnership. Partnership is great when you're with someone else and you want to have an eat what you kill kind of method of breaking out the profits and losses. But if you're by yourself, you either want to be a sole prop or an S corporation. But I can't really tell anybody exactly what the threshold is because everybody's tax situation on their joint return is
Yeah.
different.
Yeah.
But the tax law changed by President Trump in 2018 that created the QBI deduction
Mhm.
really helped. But because lawyers are considered a specialized trade, service, or business, it's kind of made things a little bit more. But once you get
Understand.
past that, I would say the top three are home office, missing family employment, such as maybe you're supporting a mom or a dad, and there
Mhm.
might be a way to talk to your tax accountant to see how that mom or dad could be part of your business and providing some sort of service or rental so that you can have some of that be a write-off. A lot of people jump into kids being employed, but that's a really slippery slope. So if you do it, make sure you're doing it with your tax accountant to make sure that you've done it completely fine. I think there's a couple of tax law cases that say that the kid has to be 7 years old or more. So
Okay.
watch out. And then missing medical benefit. Sometimes there are certain types of plans like HRAs or MERPs that you
Mhm.
can come in and have some really great ways of reimbursing medical deductions that or medical benefits that you haven't been able to run through insurance or something like that. But those would be the first three things that I would quiz your tax accountant on and just see what they have to say about it.
So wait a minute, Louise. Are you telling me that I should not go on TikTok and watch someone telling me that I can deduct all of my kids, like I can pay them all kinds of things? I should actually talk to a professional about this.
Yeah, but I mean, it's the same with using chat, right? It's like
Yep.
chat is just the start, and then you go and talk to your person. But I think what's happened is that so many tax preparers have become transactional. You're a
Yep.
number in a system, in a machine, and they're just doing your tax return. They don't have the capacity, unless they have a very small practice, to talk to
Yep.
each and every person about everything they can be doing. So taxpayers, the attorneys have to be really proactive and say, hey, my friend's doing this. What do you think about that? Oh, I think I should do this. Am I right? And then you just kind of have a conversation. Keep them engaged. Keep the tax accountant on their toes and see how they
Yep.
react under pressure.
And if they're not reacting, then you need to find one who's active with you, because I find that some accountants are very transactional. So make sure that you have the right professional helping you that year-round interactive engagement.
Absolutely. And they can always be in their own lane. Maybe you really love your
Yep.
tax preparer, but you just need to hire someone on the side to do the consulting year-round stuff on a one-off or whenever the occurrence happens of a change in life event or decision. Just get a consult and then bring that information back to the person that you already have your relationship with. There's no problem with that, at least in my point of view. Some other people want it all, but I'm cool having
Yeah.
it to work during the summer, but not during the tax.
It's a very good way to look at things. One quick thing under the deductions, and then I want to go on to some of these pitfalls that lawyers make, because that's always a fun part to talk about. How about retirement?
Yes.
I feel like business owners miss out on this a lot.
Yes. So it's a solo K all the way. There's no doubt about it. And the brokerage houses like the Morgan Stanleys, Charles Schwab's, and so on, the financial advisors are very resistant and they want their clients to be on SEP IRAs because they still haven't learned that a solo K is almost as cheap to administer as a SEP. It's just when you go
Mhm.
full blown 401k because you have certain tenure from your employees, certain hours from your employees that you have to go into a full blown one. But I think the amount of money that you're missing out on being able to put away is just tremendous when you're looking at a solo K versus a SEP. Also, a thing to look into is when it's a solo K or a 401k, it's associated with you as an individual. So even if you sold or merged or anything, that account is yours. And you can take a loan against that value of up to 50% or 50,000 at the most, and you can pay it back over time. So it's just this extra cushion of finance that you can always lean on if you're a responsible person. The other one I think people are missing out on are backdoor Roth.
Okay, talk about those because I love backdoor Roths.
Me too. So the most important thing is have a financial advisor that knows all of your accounts. If you have any IRA accounts, you're not able to do a backdoor Roth. You're supposed to not have any IRA, traditional IRA balances. So what my strategy would be, roll all your IRAs into your new solo K. So it's all in one place. Wouldn't you like simplification? And then what you do is you start doing your backdoor Roth. So for 2024, you can do one, and for 2025, you can do one still, 7,000. There's a catch up of 1,000 if you're over 50. And backdoor Roths are just like a really smart way to put your money. It's $7,000, and I think we can all figure out a way to put $1,000 into a personal account and let it just sit and forget where it is until it comes to tax season. It's a no-brainer.
Excellent. Thank you for bringing those up. So let's jump into what are some of the big tax mistakes that lawyers, especially self-employed lawyers, tend to make?
All right. So when I'm working with a client, I normally start in the place of making sure your bookkeeping is like you've got someone doing the bank reconciliations, the money and the numbers are accurate. Once you get past that, we talk about quarterlies. And wouldn't it feel so good if you were proactive about your quarterlies and when you go in for a year-end planning, the tax accountant says, hey, you don't owe anything for Q4 in January because you've been so good through the year. And when we've done this final true up, you're on par. And even if you have a refund, you're going to apply that to next year. So that when you go into tax season, you're like, well, I know I'm not going to owe any money. I'm just giving them extra information so that it, set in stone. It's a really good feeling. After that, it's all about setting up your 401k contributions. You want your retirement to be in line. And what I've really been trying to do with my S corporation clients is we used to do it where you just pay yourself once a year in December. You save your $46 or whatever it is on Gusto, and you just pay yourself once. But that's not steady, and that leads to reckless spending because you're not paying attention to the numbers. So if you can make a steady wage every month and a steady retirement money put aside every month, when you get to the tax time to do all the contributions, you can then choose how much of that money you've set aside is actually going to go to retirement. If you haven't set that money aside, you're blowing it on a car and you're not going to contribute to retirement. Well, your new, I don't know, Tesla something or other is not going to support you when you're 69 and a half and needing to take drugs. So you just want to be more savvy and planning better. And then I think the final bit, and this is more just like tying the package with a bow, is just all the little tiny deductions and things that you're not thinking about. And that's why you need to make time to sit down with your tax accountant and talk about what's going on and how spending and how business is going. Because it's in that conversation that the tax accountant gets to ask you questions and say, well, yeah, let's take that as a deduction. That totally makes sense. Or, hey, what about you and your family? Have you been doing any trips on your seminars and then staying over for a couple of there's creative ways to build your practice around your lifestyle and make it a deduction. It may not be 100% deduction all the time, but that's what we're all working on our own for. We're not wanting to make money for the man. We're wanting to make money so that we can have a flexible lifestyle and be with our family.
You started to go down something really quick there that I want to talk about a little bit more. A lot of lawyers are going to like this digital or nomad style of lawyering. Lawyering on the beach is often a term that we hear, or things like that. What's different about taxes? Is there anything separate that we have to think about for taxes in those cases?
Yeah, you definitely want to keep track of your days outside of the state. Definitely want to keep track, and that would mean also which days you're out of the country if you're taking it international. Different states have different laws, of course. They have different apportionment factors. And so you just want to be careful that you're not taking Zoom calls and generating money for your firm in different states where if they ever caught wind, they'd send you a notice and say, hey, you need to be filing this state. So, but the same kind of caution also comes to if you have remote employees. What do we do when we don't have an employee workforce in California? We have to start looking remotely and look at other states. So work closely with your HR department, your tax accountant to figure out if the states that your remote employee is in, is it going to trigger anything? Does anything extra need to be tracked? But the other thing about the nomad life, I love it. I think it's what's going to create another element of the myth of balance for professionals. But if you have a brick and mortar and you're there 100% of the time, you need to work with your person, your professional, and see, can you write off a home office? Like, what does that person want? What does that professional want you to have to tick that, yes, you can take your home office as well as your brick and mortar? But then whether you have your home office and then you go decide to rent a beach house in Florida, I don't know, wouldn't be my first choice. But say that's what you were to do, is your professional willing to say, yes, let's take this as some sort of retreat expense or some sort of business meeting expense so that you can take part of that trip as a deduction? It's a slippery slope, but that's why I love working with attorneys on these things. I'm like, as long as we have a memo and it says like which clients you met, there was a conference, like really documents who, what, where, when, why, I'm willing to give it a go.
Yeah. And I think I hear that from lawyers and other professionals too, that sometimes they have a tax person who's very, very, very conservative and won't allow any of that. And so I think you have to find someone who fits your style if you're willing to try and maximize your tax savings legitimately, because I've seen very much the extreme the other way too.
Yeah.
I think it's really important to find someone who fits your level of comfort. So
yeah. I mean, you want to sleep at night and you want to know that when, the way I put it is that when you get an IRS or a FTB notice in the mail, I don't want my clients ever to panic. They get it, they go, oh, it's from them. And they're not supposed to emotionally connect to it. They're just supposed to open it, scan it, send it to me. And then I get back to them and say, okay, you need to panic. But you know,
right.
I think that's the most important part. Like, how well do you want to sleep at night? And then do you have a good match?
Yeah. I mean, even as a bankruptcy attorney, I would communicate with the IRS all the time. So I would get letters constantly from the IRS. But if one came for me, my brain goes into that fight or flight. I'm like, why did I get an IRS notice for me?
Yeah. I'm like,
So
oh
I
no, what did my
totally,
husband do now?
right? Like, what's going on? That's funny. Okay, so let's wrap some of this up. There's so many more things we could talk about,
I
but
know.
I love to know from you what's the what do you wish lawyers knew about taxes from their personal stand, like from their business management and personal standpoint? Like, what do you wish lawyers would realize about the taxes?
Um,
On the spot.
yeah. So I think business first, like business approach, like we have this huge movement again across the tax industry of we're not billing by the hour anymore. We're billing by the value, right? And so I think changing the way a lawyer thinks about package or value-based pricing, not to hit it too hard or judge it, because a lot of accountants are going that way. So if they're saying, we want you to be on a $10,000 subscription and these are all the services, you can't say, well, how many hours is that? And it's not relatable anymore. And I think there would be so much empowerment for attorneys if they started thinking the same way that we are here as tax accountants. The next one is the psyche or the frame of mind. I trust my attorneys because they're professionals. Their minds are complex. They handle the puzzles. They know how to read the code or read whatever laws, technical, so on. Trust us, the tax accountants, to know what we're doing and don't argue with us.
That's what lawyers do.
I
We
know.
argue.
I think there's a huge difference between some fun banter and just trying to poke holes through things to make sure
Yeah.
that both parties are comfortable. But I think sometimes there's this this belief that some attorneys think they can do a whole bunch of self-research and do their own things, and they just need somebody to put the numbers in the right boxes for them to sign. And I think they're missing out on this huge amount of value, because unless you want to go and read the entire tax code, you're not going to have the same level of understanding of how it really breaks out with numbers versus how it breaks out in technical application.
Yeah. And that's funny because what lawyers often say their biggest pet peeve is clients who won't listen to them and do their own research on Google. Lawyers become the worst clients.
I have that as a quote, and whenever I'm in a Zoom call, I'll have it in a warmly tag at the bottom. I'm like,
yes.
Look.
Okay, so on the Rebel Roundtable, we do have a Spotify list of your best Rebel anthems that you pump up when you want to, think about a theme for your business, think about your day. What's your Rebel anthem?
I was playing around with it in AI the other day, and I was just like, ooh, I like Run the World Girls by Beyonce. It suggested Don't Stop Me Now by Queen. And that really does resonate with me, because my dad used to have this old 1967 Jaguar, and he'd pick me up from ballet and he'd be blasting Queen, and that would be one of the songs. And the reason I like that song a lot is once you're in a rhythm, once you've got your cadence and you're just going and everything is right, you just feel so liberated. And it's true, like nothing can stop you because you've got everything taken care of. Somebody's got your back. You're actually able just to drive off into the sunset and just have a good time. Dire Straits' Money for Nothing came up, but I didn't like the quote "chicks for free," so I said that wasn't with them. That would not be in line with my mantra. But it's really hard to find tax specific or motivational, and I think it's because there's all this weight and doom and gloom around taxes. But as you can tell from this conversation, I always have a smile on my face when I'm talking about taxes. I think it's just this magical puzzle in the sky that I just have to put all the pieces together. And so I'll keep on searching, and I'll let you know if my soundtrack changes.
Let me know. So I'm going to add Run the World Girls by Beyonce and Can't Stop Me Now by Queen to the playlist, because I don't follow rules and this is my show, so I can do whatever I want. So I'm going to add both. So that is up on Spotify. Thank you, Louise, for being here and for having such a fun conversation about taxes during tax season of all times. I appreciate it.
Yes, thank you for having me.
Yeah, and I'm Jen Lee, your host with the Rebel Roundtable on Rebel Esquire. So I will see you all next week on Valentine's Day for a very fun topic on divorce.